And so that was really nice because I started my training journey in 2010 and I declared financial freedom in 2012. So I literally worked my butt off for about 25 months. And funny enough, I didn't voluntarily quit my job. I know a lot of people have that goal or dream or that aspiration of firing their own bosses. I didn't really have that because I actually did enjoy what I was doing, minus the crazy hours. And so when that happened, the day I got laid off, it was July 25th, 2012. And the reason why I always remember that date was because I actually went home that day and I looked at the time, just the spreadsheet of my portfolio. And I realized that I already hit financial freedom number one, meaning I actually don't have to find another job now to pay my bills. And so I had a decision to make. Do I go back into the workforce, find something else? Or, hey, how about I invest a little bit more and become a full-time investor, like what most people would call us? And by full-time, really, I mean, we're putting in usually what, 20 hours max a week. Back then, definitely a lot more, and now a lot less as an investor myself. Um, just decided that I'm just going to continue to invest. And this is why to this day, over 90% of our portfolio is built on other people's money. Because once I got laid off, I no longer had qualification, even though it was 2012 and lending rules were a lot looser than what they are now too. However, I maxed out my qualification. And so this is why one of the biggest things that I'm always helping others to do is really how to attract money properly. Because I've had the experience of losing all of my savings. So when I'm actually investing with other people's money, to me, it's sacred. I take a lot of responsibility and accountability for it. And the other thing is, I think it's because I went to school for marketing and subsequently also got into a sales professional. I was never really that afraid of rejections. So I think that helped. I mean, all of our previous skills or all of our collective experiences, they will always help in whatever venture we go into. Because when I first started in real estate investing, one of my biggest roadblock was, oh my God, if you gave me a hammer, it's more of a weapon than a tool. I couldn't build anything
Like
with it.
a weapon for your own self-injury, then
Exactly, exactly. And so, and so I had this roadblock thinking, oh my God, maybe this is not for me. So that maybe I shouldn't leverage real estate because people are flipping or people these days, they know how to burr. Bottom line is you need a crew, you need to know construction. And I realized that you don't need to know construction. And so these days, more so, I'm also training people to think that, you know what, we're investors. And you're an investor because I know you leverage more than real estate as your vehicle to create income sources and to create long-term wealth. And so the mindset shift really is, no, I'm learning how money works. And I'm just leveraging real estate as my main investment tool to generate multiple sources of income and long-term wealth. And so coming back to sort of where I am today, it's because of everything that kind of added up together that, yeah, over the years in 2013, we expanded into the US market. In 2017, we expanded into the UK market. And all that, I'm just going to be completely transparent, all for selfish personal reasons. My husband and I, we enjoy traveling and we've always wanted to have vacation homes across the globe. And so we were taught that, hey, you know what? What better ways to do it than being able to vacation while conducting business at the same time?
yeah, working
And
on location.
exactly,
Yeah.
exactly. And so that's actually how we ended up in the US market first, and then subsequently in the UK market, because it kind of opened ourselves up to all of North America and parts of Europe too. Yeah.
So Tim, can we go back to those 25 months? You got like
Yes.
yada 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 25 months that got you to level three financial freedom. I imagine someone who hasn't gone through that process would like to know like
Yeah.
what happened in those 25 months.
Yeah. So in those 25 months, wow. So so I started educating myself, and so me taking real estate investing strategy courses in 2010, as I mentioned earlier. And like I said, I did have a mental block. So I wasn't crazy about flipping or finding distressed properties. And it was at that time I learned a little strategy that people know as lease options. And the street name for it is rent to owns. And that's why to this day, that is still my baby strategy, because within the first 2 years, I managed to do 36 lease option strategies.
So,
And
sorry, you did 36 of them in 25 months?
36 in the first 2 years.
Okay.
And I'm happy to share how I did that as well. So,
well, let's clarify it first, in case someone doesn't know what a lease to own or rent to own is.
yes.
What is a lease to own?
Yeah,
we're still talking about real estate.
absolutely. So I'm going to get a little technical, if that's okay, because lease options, obviously, a lot of people actually know it as an acquisition strategy as well. In this particular case, I actually used it as an exit strategy, and our main focus was to help those who were not able to qualify for traditional financing with typical lenders that we all know, the major banks and the A lenders, and yet they're motivated buyers, they're motivated homeowners. It's one of their dreams, their life goals. And so we leveraged lease option to help people become homeowners, and mostly young families, actually. And the markets that we were in were Edmonton and Calgary, because Edmonton is where I live, and Calgary is the nearest other major city as well. And this was the year 2010 to 2012, as you know now. And the markets were great, and oil was booming. We're very much oil and gas heavy economy here. And so there were a lot of people that were making good money. However, they had made some blunders that they weren't able to qualify for traditional lending. And so we kind of came in and positioned ourselves as alternative financing solutions for them. And we worked with a lot of key power team members like mortgage brokers. And we took the time to really explain our process, because as you know, there are bad students in good schools and good students in bad schools. We like to think that the way we ran things, we were the good schools. However, there were some bad students that kind of executed the strategies incorrectly,
Right.
that hurt a lot of people. So there was some sort of misconception about how the strategy would work for people.
Tim, I may just rephrase that as in they had their own self-interests at heart rather than looking for a true win-win-win scenario. Because the strategy's been taught one way. Actually, no, there's people that teach it to be
lots. Yes.
That teach it all about the money for the self and not
absolutely
a 90% lose situation for the tenant, for the homeowner.
Totally agree. Right. And so we really just decided to leverage that strategy and really went gangbusters with it, because again, I don't have to manage any renovation project. We could buy at market value as long as we set up the process and the rent to own program properly for the tenant buyers. Really, from a tenant buyer's perspective, they're getting the hand up so that they can get into home ownership in typically 2 to 3 years time back then. These days, we're usually doing 2 to 4 years now, because value's gone up. Even though interest rates are lower, there's usually other hindrances as well. However, for us, from an investor's perspective, when you get into a lease option program, typically speaking, before you even get into it, you know what kind of cash flow you're looking at on a monthly basis. You're also looking at a fairly predictable return on investment on an annual basis. And so that was also another aha moment for me when I first started learning this, is that it's really about investing with confidence and calculated risks. Like, I knew going into it what I was going to be making. So even if the markets went super well, which it did back in those days for even the Alberta markets too, I was happy, because that means I didn't have to incur any headaches. Let's say, getting technical a little bit, if the option to purchase price for a tenant buyer is $400,000 and the market value when they were ready to purchase is 420, 425, that means I already cashed out properly on a monthly basis for 2 to 3 years. I already knew what kind of profit I was going to be making. When the market value exceeded the contract value, that means I know my tenant buyers were going to qualify for that loan, no problem. There's no appraisal issues that we would have to deal with.
Right.
And everybody's happy.
Unless they're morons, they're gonna buy the house.
Exactly. And so this is why sometimes when I hear investors going, oh my God, you know what? Value went up. I really don't want to sell anymore. I'm like, contractually, you agreed to sell at that price already. I know you trade stocks as well, right? So you're bound by that. It's an option contract.
Yeah.
But
it's actually funny. That's how I've explained covered call strategy to real estate investors. This is rent to own.
That's funny. Yeah.
Lease to own.
Side note. Yeah, I actually just started learning how to trade futures beginning of this week. Hardcore. So that's another conversation.
It's over my head. So Tim, you're talking. You started this in 2010. Did you? Because the Alberta real estate market in Edmonton, Calgary has been pretty wild, volatile. Yep. Some would say. Were you in it the entire time?
The entire time. So you know what? Let's talk about rainy days. How's that?
Yeah. Because the show is truth about real estate investing. I prepared you for that because this is never all sunshine and rainbows, folks.
No, it's not. I mean, there are a lot of headaches and tears and sweat really behind the scenes, and I'm not going to sugarcoat it because in 2014, obviously, oil and gas started plummeting, and in 2016, while we were vacationing in Italy. One of the last days, we were there for almost 3 weeks, actually. And so one of the last days we were there, I got a call that nobody ever wants to get. It was one of our partners in Calgary who we actually had at this point. I don't know the exact number now. I've worked really hard to erase some of the details out of my head. We had nearly 100 doors held together. And
just you and this partner, you and this one partner.
Yes.
Okay, that's a lot.
Yes, and the partners were the managing partners down there because the properties were scattered around the Calgary market. Long story short, some of the people in that business, they were doing shady things, and the main contact that we were working with was also mildly blindsided. And I got a call basically saying that they were filing for bankruptcy. And what that translated into for us is we basically lost $1 million in cash overnight, plus equity, plus all the OPM debt servicing we had to do. And so leading up to that point, that was probably the biggest loss that we had endured. Because if you think about it, I mean, 08, 09, yes, the economy crashed. The market sort of came down a little bit. However, oil was going up. So Alberta kind of had its own bubble. So ever since 2010, when I really got started in the real estate investing industry, the market's been pretty good to me up until about 2015. And 2016 was the big blow there. However, we were still very young when the market was going up. So we weren't really acquiring all that much. I mean, some would say, 3-digit in number of doors in 5 years, that's pretty good. For us, we had really big goals for ourselves because we both came from corporate jobs. Like we were making decent money. So we knew we had to work hard, haul ass for a few years and retire. And so really in 2016, when that happened, we looked at our portfolio, and this is also why I really do teach people to diversify in markets as well. And so, earlier we were discussing, you said you like to stay in your home market. And I said, no, this is why I go into various markets. The sidebar to that is, even though we did lose a lot of money with that particular partner, between 2013 and 2016, we already started diversifying into the Ontario market, into the East Coast, and into the BC market. And BC market was booming. And so we were able to actually liquidate some of the other projects to cover all the losses that we had in 2 years' time.
Tim, can you share how many assets under management you had?
Right now or back in those days?
Both, if you're willing to share.
Okay. Yeah, you know what? I think right now, honestly though, I kind of stopped counting after 100. The only reason why I remember 100 something in 2016 was because the loss we had, because our portfolio got cut down to about 50% of what we had. And so right now we are managing roughly about 380 doors at the moment. And so a lot of people, they like to talk
sorry,
about
Tim, is this all RTO? Is this all lease auction?
This is not all RTOs. Okay. So RTO was my baby strategy. So these days on average, every single year we hold about 2 to 4 RTOs now. It's not something that we actively pursue right now, but it's a strategy that we will always be doing because we like the aspect of being able to help people get into home ownership. And also because we do train other people how to execute this strategy, we always hold ourselves to the same standards that we got to be active investors ourselves before we can train other people how to do the same things. And so because of RTO, it allows us to go into private lending, it allows us to go into income properties. And that's why this particular portfolio in Calgary was actually income properties. It was a collection of 8 plexes, 12 plexes, all the way up to, I think one of them was 25 doors in one title. So it was a collection of multi-units, the smaller multis.